I no longer want to park my savings in dollars and US debt. I prefer to own gold, or in some cases in platinum and silver. I want hard assets. I want to hold these assets that are outside the purview of the United States. No, in other words, there's no sanction or confiscation that they can impose on me. That's why gold is in this primary bull market. I'm almost 25% net long stocks. I have foreign stocks. I've got precious metals. I have momentum. So I am long and I am up on the year. So the question premise is incorrect.
In today's silver news headlines, could the silver price really hit $100 per ounce? The silver spot price has surged nearly 30% in the first half of 2025 to reach a 13-year high as it broke through the US $36 mark in early June. Silver has rallied on growing economic uncertainty amidst ongoing geopolitical tensions and Trump's escalating trade war. Well-known figure Keith Neumeyer, CEO of First Majestic Silver, has frequently said he believes the white metal could climb even further, hitting the US 100 mark or even reaching as high as US 130 per ounce. Neumeyer has voiced this opinion often in recent years. He put up a US $130 price target in a November 2017 interview with Palisade Radio, and he also discussed it in an August 2022 interview with Wall Street Silver. He has reiterated his triple-digit silver price forecast in multiple interviews with Kitco over the years, including one in March 2023. In 2024, Neumeyer made his US 100 silver call in a conversation with ITM Trading's Daniela Cambone at the Prospectors and Developers Association of Canada, PDAC convention. And in April of that year, he acknowledged his reputation as the triple-digit silver guy on the Todd Alt podcast. At times, he's been even bolder, suggesting in 2016 that silver could reach 1,000 US dollars if gold were to hit 10,000 US dollars. More recently, his expected timeline for 100 US dollar silver has been pushed back, but he remains very bullish in the long term. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Platinum is breaking out. It's actually more rare or rarer than gold is. It's less prone to oxidation. Gold doesn't really oxidize at all, but it's even, more noble metal than that. And it's less than half the price of gold. So there's a lot of catch up to do there. I'm not saying gold's going down. I think I own both. I haven't sold gold, but I think it's a wonderful investment. But that's, the whole Bitcoin phenomenon, even though it's just so antithetical to what Bitcoin was supposed to be. But the reason why it's so popular is because people are dying for another alternative to the US dollar. And not only the dollar, definitely it's not, not that they're finding solace in the euro or the yen or the renminbi. So they're looking for places to park their money. Of course, I think it's a height of hypocrisy to say, well, a Bitcoin has its value because it's decentralized, and yet Wall Street embraces it. And then, everybody knows who you are when you buy a Bitcoin ETF because of KYC and AML laws. They all know you are. They can confiscate your Bitcoin, your supposed holding. But you need Wall Street to justify a value that's, I think it's like $106,000 a unit. A unit of what, Dunnigan? Do you know what a private key is, right? It's just a bunch of numbers and letters, electronic numbers and letters. You could write those down on a piece of paper if that makes you feel more valuable about it. That's all you have. That's what Bitcoin is. It's a private key that allows you access to a public key that gets you to a decentralized ledger. The blockchain is a wonderful technology. As to how anybody thinks that can replace or supplant a precious metal is beyond me, because there's an unlimited number of blockchains that can be created. So anyway, I digress. But the reason, the idea, the purest idea of Bitcoin is a way of getting yourself out of the fiat currency system. And so some people are running to that, cryptocurrencies. I'll run to platinum and gold. My few shout out, maybe even a little silver. I haven't gone there yet, but it's on my radar. You joked about it. It's just a reach to get out of the fiat currency system while there's still, this is a very unusual situation where you had stress in the market. And usually when you have a fear of recession and the market starts to fall, what do people usually do? They usually buy a treasury, which is denominated in dollars. So dollars tends to rise. It's part of, if you look at the four horsemen of the economic apocalypse, which I would usually gravitate to in times of recession, depression, or when there's a market crash, well, one of those things is the dollar. Well, the dollar has been performing terribly in times of stress. And that's a huge red flag for me. That tells me that faith in our sovereign bond market is faltering. And if foreigners no longer have the desire to hold our bonds because of insolvency or because of inflation or just because there's no more trade surplus to recycle into dollars, that's a big warning sign. So when the problem isn't, or I say the solution isn't to own dollars and bonds, that's part of the problem. If you don't have a viable plan, you can be in a big world of hurt as far as your retirement is concerned.
In today's news recap, silver slips as price retreats from overbought territory on easing U.S.-China trade talks. Silver prices are easing on Wednesday, retreating from multi-year highs as bullish momentum fades and traders lock in profits. The metal is currently hovering near the $36 psychological support zone, having tested its highest levels since February 2012 earlier this week. On Tuesday, high-level negotiations between the U.S. and China concluded in London with a provisional framework agreement reigniting hopes of a reset in bilateral trade cooperation. U.S. President Donald Trump commented on trade talks on Wednesday, stating that we've made real progress with China. It's about fairness, and we're close to something that could work for both countries. I won't sign anything weak. Chinese Vice Premier He Lifeng added that China's stance on trade issues with the U.S. is clear and consistent. Both sides should strive to establish stable and long-term trade and economic ties. The optimism initially supported industrial demand sentiment, helping lift silver. However, with prices already overbought, extended gains remained limited. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
In 1913, when you formed this creature called the Federal Reserve, one of their mandates supposedly was for stable prices. That's what Congress has given them, the edict of stable prices. Now, I consider stable zero. I consider stable prices not going up or going down. So that's the definition of stable. But somehow that got under Ben Bernanke and in the zeitgeist of today, every central banker on the planet in the developed world says, yeah, 2% sounds like a good number to me. Even though we're not going to meet that number for 6 years. We're going to be above that number for 6 years. 2% is the new definition of stable. And the reason is clear, because they just can't let asset prices fall, because that's the assets that bank own. They own, mortgage related debt for the most part. And if home prices fall, banks are going to become insolvent, run on banks, and then they stop lending and the economy crumbles. So they need to get stock prices growing. They need home prices growing, and they think that's going to lead to nirvana. But on the funny thing happens that, Bernanke was a 2007 phenomenon, right, Donegan? So on the way to 2%, home prices didn't go up by 2%. They went up by 20%. And now no one could afford a house. So but the first time home buyer has been priced out of the market. And so if you can't get the first home buyer in there, then the second home buyer can't sell. And then, you have a frozen house. The transaction market is now frozen. So this is what happens when you morph from stable prices and sound money, which is a gold standard. You limit the base money supply to 2%, which is commensurate with the mine supply, about commensurate with the mine supply to gold. Then you just eliminate all these bubbles. And by the way, stop bailing out banks. Let there could be a fractional reserve system, which is horrific in of itself. But when you have a fractional reserve system and one of these banks goes amok and lends much more than they have in assets, and liquidity runs dry, do not bail them out. Let them fail. And then we will not have any more inflation in this country. And we'll have a solvent and viable middle class, which is absolutely essential to a healthy country. This is the abrogation of the free market capital system. I see. That's why we're talking about things like, why would this love affair with digital currencies, which is, I think, the precursor just to pave the way for central bank digital currency, where, right now, if let's say you have your bank at, say, Wells Fargo, and all these banks say, the Fed says, the central bank says, we are now going to charge you a negative interest rate on your deposits, and then we'll make it 5%, negative 5%. What would you do? Well, you would run to your bank at Wells Fargo, and you would say, okay, I want all my money out. I'm taking my physical currency out, and I'm stuffing it under my mattress because I don't want to lose 5% per annum. Thank you very much. Well, in a central bank digital currency, they have plenary control of your life. They see everything you buy, everything they sell. There's no more tax cheats, and I don't espouse tax cheating, but there's no more hiding. There's no underground economy. It's just that your money is in the bank, and they thank you very much. Negative 5%, we'll take it. Or if you don't like it, you could take your money out of the bank. No longer. You could only spend it. So you can't hoard money. So there's no more runs on the bank. In other words, it's complete and total control of your life. That is where we're heading. And that's why I think these digital currencies are paving the way. You're going to have a central bank digital currency, a Fed coin, whatever it is. And everybody's going to be happy about it. Oh, yeah, wow. And electronic money, what do you do? We have to worry about, making sure all the bills in your wallet are folded nicely and are all, in ascending order, like an obsessive compulsive person like me. Hey, you can't do that. There's no more there's no more paper money. Digital coins, currencies have replaced all paper money.
What do you think of Pento's take? Do you agree that platinum is still massively undervalued and that buying hard assets is a smart way to protect your savings? Or do you think this big reset scenario is overblown? Is it a coming reality or just wishful thinking and market hype? Post your honest opinion in the comments below and share your own gold and silver price predictions with the Stacker community. Now, check out this next video right here. It's the perfect follow-up for you. I'll see you on the other side.